We will either find a way or make one. Hannibal Barca. My friends, you've got to have that kind of commitment that Hannibal did, that you're going to succeed. You are going to fight. You are going to find a way or you're going to make one. If you have that kind of commitment to the charts, my friends, the world is your oyster. The future is bright for you. 10 to 15 minutes each and every day. That's all we ask. Let's talk about where we are on the charts. Everything down for the day except 20-year bonds up a little bit, 0.44%. Let's start with the S&P 500. Where are we there? Well, we can see some indecision during the day. We spark down to about the same bottom in the morning and the afternoon, but we can also see some top movement there. And again, as we watch where things are, price percent oscillator. Boy, I'm going back in time. The STC is heading down. Now remember, the STC is similar to the price percent oscillator in that it comes from the MACD, but we also add stochastics in there. It's one reason we like it better. It gives us the best of a couple of different indicators. So that is why we use the STC versus the MACD alone, or the price percent oscillator, which is a percentage version of the MACD. So as we look at where things are, we can again see some oscillation in price. If we add in volume, we can put that into play also. Take a look at it. There we go. It wasn't popping up right away. We can see that we did have up negative volume in the afternoon, which is good to see. We'll keep an eye on things. Not going to pull the plug on this yet, but we do want to keep a careful watch on it. Let me make sure that there we go, that I X things out the right way. But we will keep an eye on things. Of course, our bigger charts, the 2-day chart, still heading down nicely. The weekly chart, still heading down nicely. Want to see those candles. If we're going to continue with strong movement, want to see us penetrate that 200 EMA and really go negative. But we'll watch as the week continues to progress. Now, the NASDAQ 100 down even more for the day, 1.37%. Not any indecision in the morning, a little bit in the afternoon. We again will keep our eye on things. We can see how that STC plumbing down even further. Quite nice. Now, if we go to the volume, what do we see as we check out the volume? We can see where in the morning that volume hit there right up to the average in negative volume, slacked off some in the afternoon where we saw a rise there. But again, good to see. We don't check the volume a whole lot, but when we get into a trade, I like to just see how much is going on there. Again, we're well below the 200 EMA, well in negative territory. We're at a negative 15, of course, on both the S&P and the NASDAQ 100 when it comes to the success multiplier formula. That means, of course, that our 2-day is negative on the STC and heading down, as is the weekly. And again, moved through that 200 EMA. We are well in negative territory when it comes to the NASDAQ 100, to the tech stocks. That's where we are on stocks. Let's go into bonds. Bonds pulling up a little bit on us. Now, those of you who are risk averse, of course, when you saw that green candle forming in the morning, you could have pulled the plug on that, taken your profits at what, 3/4, well, maybe 1% or so, depending on when you got out. You could have done that same in the afternoon. And again, there are different schools of thought. Some risk-averse people are going to take the profit the minute they see a green candle. Others will ride it out and see. Look at a number of things like what? Well, you'll look at what's up with the STC. You can see that it did burn off a little bit of energy in the afternoon, not heading down at quite the steep angle. If we just take a quick glance at volume, you can see we went from red volume, peaked up to right there at the average, jamming up on that. Not weak volume when it came to the green volume, but actually stronger. So that can bode for problems in the future. We'll keep an eye on things. We're still in positive territory. You don't have to jump out yet. You can. I'm not going to tell you not to. What I'm going to tell you to do is, if you are, I want you to keep up with it and learn a lesson from it. Whatever you do, please make sure that you are charting what you're doing When I say that, you're not only charting it here, you're keeping a running record of what you're thinking, why you're doing what you're doing, and when you cash out in your practice trade, how much you're making or losing, and you're keeping records of why you're doing what you're doing. If you're not learning, if you're not writing it down, it didn't happen. That's something they like to say in the medical profession, like to say in law enforcement. If you didn't write it down, it didn't happen. It means you got no record of it. You can't learn from it. It's not there. It's not real. So if you want to make things real in your practice trading, write them down. Write down your thoughts. Learn from those things. You will find that that is worth its weight in gold. And in the future, maybe literally in gold. So that is where we are on the half day. What's up with the 2-day on bonds? It is still negative, not reaching the low of that prior 2-day candle, but heading down well below the 200 EMA. And on the weekly, nice big down candle accelerating lower lows. That's good to see. So all that's looking good. Now, let's move from bonds to gold. Gold down a little bit for the day, 0.32%. And again, we see where gold is a red spinning top in the morning, little lower spinning top in the afternoon. Again, we've got some up movement there. We'll again keep our eye on things. What's up with the volume? We see some up volume in the morning, and then we see some red volume in the afternoon. That's good to see. We'll keep an eye on things, see which way gold is going to go for us. Not much going on in gold for the day. We look at where we are on the 2-day, went from a red spinning top to a solid red down candle. Still green though, we talked about this before. That's given us some concern, makes us a little cautious. Still green on the STC on that intermediate 2-day chart. And after a green candle on the weekly, got a down week here, but we're nowhere near the lower lows. So we are being cautious as we watch gold on this down move. Lastly, we'll go where? We'll go to Bitcoin. And again, another down day for Bitcoin. Down, I gave you all the wrong percentage on one of those. I said gold was down 0.32%. I'm wrong. The change was 0.32. The percentage was 0.21. Bitcoin down 1.14 on, of course, this short-term Bitcoin future ETF, which is tradable in the marketplace. Don't have to go to a crypto exchange. And what do we see? Well, we can see it was down in the morning, about the same in the afternoon, red down candles. Bitcoin again, what are we waiting for on Bitcoin? We're waiting to establish a nice base at about that 1820 mark, which is where I'd like to see that. We particularly see it on the weekly. Wait for it to establish itself about there and then take off and rocket up like it rocketed down. I'm waiting for that to happen. When that does, I'll be going long Bitcoin. I hope you'll be doing long practice trades in Bitcoin too. That is where we are, folks, as we end the day. Patreon members, thank you for all your support. We so appreciate all of you being with us. You have questions, problems, concerns, don't hesitate to reach out to us. All you have to do is write us cw@chartingwealth.com. We love addressing your questions on the show. We love hearing from you. Please make sure to like and subscribe. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.